Ooh. How we doing? Ohio, Ohio. Bunch of warnings for my streaming software, but whatever. We're gonna ignore it. Think we're looking good. Ohio, Ohio. All right. So we're gonna dive right in. Okay, so the main thing I actually want to look at today, this is something I almost dove into on my own earlier this week. I thought it would be a good topic for the market mania, is the October 10th flash crash. So where do we start? Where do we even start with this one? All right, let's start from the top. So, as all of you probably noticed, this is one of many news articles, kind of just a random-ish one. On October 10th, let's do finance. On October 10th, there was a massive flash crash. I only recently realized that by certain metrics, it was the largest crash crypto has ever had, such as metrics like the total evaluation that was lost, open interest reduction, liquidation sizes. A lot of these were absolutely massive. So what the fuck is that? Something just came on my music app. Interesting. Wait, I'm sorry. Gotta change one other thing on the stream. Remember, if you guys are hanging out with me here in Discord, highly recommend you go check me out on YouTube. It'd be much appreciated. Helps with growing the stream, getting more people in, etc. Eventually, I'm going to take streaming a bit more serious and do some streaming where I won't even post in this Discord about it. Or I might like make a post, but it won't be connected to Shogun. It'll just be whatever. So make sure you're subscribed or following on Twitter to see that stuff. But anyways, so back here, so we were talking. I guess it was right at the end of the day on October 10th. So on Binance, at least, Bitcoin got down to like 102K. Actually, that's about where I think it got everywhere. Stuff stayed relatively in check. And so yeah, by a lot of metrics, I didn't realize this was the largest flash crash crypto's ever had. We've had more ugly looking ones, like on a chart. We've had much bigger dips, much more violent volatility, but it's when crypto as a whole was smaller. So the metrics we're talking about, like total amount of liquidations, total valuation chopped off the entire like market cap of Web3. This was our biggest yet. And I want to dive in a little bit to what happened, because only like 2 days after it happened, I got the first of a couple things coming across my feed of people saying, this feels extra inorganic. Pretty much every crazy liquidation wick in crypto, whether it's up or down, is not organic. Every now and then there's one if there's like global news that goes public, but this one's special. Seems like whoever did it may not have, or if somebody did it, and it's probably not one person, if a group of people did it, they were a little bit blunt with it and out in the open. So I haven't actually fully dived in on a lot of this stuff. I wanted to wait for this, and you guys are just going to journey with me through investigating this. And hopefully that'll be helpful in its own way, even with just like showing you guys how you should go about investigating, researching things like this in crypto. So we're just going to start with a random news article. That'll just give us a high overview for anyone who wasn't really paying attention. So over $19 billion in dollars was liquidated from the crypto market on Friday, October 10th, the biggest single-day wipeout on record, after U.S. President Donald Trump announced a 100% tariff on any and all critical software imports from China. That's not accurate. I don't actually know what... That's not the tweet I saw. Let's see if... Please tell me you screen capped it. No? Okay. Why can't you just show me the actual tweet, guys? Come on. Okay, so I can't find the tweet right now, but we'll go through this chronologically. So his first public announcement that sparked everything, it did not say on any and all critical software. It said 100% tariffs across the board on everything. Super quick, just I'm sure everybody knows, but tariffs, sort of a tax paid by the receiver when goods are moved between countries, right? So China builds some chairs for us, or flags. They build US flags, funny enough. We buy them, we being a business, maybe even a single person on AliExpress, Alibaba. And then governments have set an extra tax that says, okay, you're buying something from this country, in this industry, you pay an additional XYZ tax, right? And so his original announcement was 100% tax on everything. And we're going to get into all this, but when the first time I had the light bulb of, oh, wait, this was very much insider trading, is because, as you'll see in like some of these headlines from only 2 days ago, 3 days ago, he basically went back on it immediately. He's like, oh, no, not, we're not actually doing that. It's actually just on critical software, and like this was his second, rolling it back. And I think it got rolled back a little further even, where he's like, no, actually, never mind, ignore everything I said. So even with Trump being a retarded 12 IQ child, he's still somewhat smart when it comes to money, in that there is no chance this was a coincidence, right? He made a very public statement that nuked markets, and then within like 24 or 48 hours basically said, psych, never mind, just kidding. Why would he do that, right? Okay, so the shock sent digital assets into a tailspin, liquidation rabbit hole over the past 24 hours. This was last update October 11th, so this is right after it happened. Over the past 24 hours, more than 1.6 million traders liquidated, according to CoinGlass data. More than $7 billion of those positions were sold in less than 1 hour of trading on Friday. You can actually see that here, so we're only on the hour chart here. And I think you could tell some people got licked on this hour. Most people got licked here. In a post on X, CoinGlass said... Actually, wait, I do want to keep up with chat a little bit. Let's see. It's funny that prices fell the most on Binance, even though it has the most liquidity. It is not a coincidence. Like I said, I haven't dove into this, but I have done some reading. It is not a coincidence at all. Binance did a good job in the direction of people losing their money. Simply abandoned its customers and the people who traded there and held their spot. Yep, Later, a compensation program was announced and distributed, but the amounts are extremely low. Yeah, by the way, Timmy, if you haven't done it yet, could you give Ramalka access to the market main? Sure. Tell him to just DM me his Gmail so I can add him as an editor. I might hop to that doc after we get through this too, so appreciate you if you're filling it out. But we are in go mode with Shogun in the background, so this stream is going to be exactly an hour. I'm going to close it at the top of the hour, so might not have time. Oh, I'm finally really excited about our NFTs again. We have such a cool plan in place. Okay. So 7 billion in liquidation, 1.6 million traders liquidated. CoinGlass said the total might be much higher, given that exchanges don't necessarily report such orders in real time. This is absolutely accurate. You can almost be confident that when you see certain metrics about users in crypto, unless they're inflated by bots, I shouldn't say any metric, but this sort of thing, there's no way someone like CoinGlass can track everyone, every exchange, every centralized thing, so it's almost definitely higher. Binance, for example, only reports one liquidation order per second. I actually don't know what that means. That's interesting. Also, the song that just came on. Dope little tiny song from like a tiny band that I found on the new skate game. Only good thing about this game. He already said, please check BD chat. Cool. Cool. Suku, can you shoot me a DM right now? Literally just do a single letter or something. I'll just see that this afternoon after my calls and it'll remind me to go grab Ramalka and bring him in. What up, Shroom? I love little dancing gifs. Okay, focus now turns to counterparty exposure. Actually, let me... How much of this do we really... The move came in response to China's decision to impose export restrictions on rare earth minerals. Literally the plot of Call of Duty Black Ops 2 in the same year. I'm sure you guys have seen memes about that, right? Like, that's actually crazy. I'm sure we've all seen memes about The Simpsons predicting the future and all that. But Call of Duty, something that only releases one thing per year, got the year and specifics right of some crazy shit coming with China. Anyways. So again, this was on October 11th. In the last 24 hours, Bitcoin was down 7... Where's my YouTube chat, actually? There it is. The world's largest cryptocurrency witnessed heavy liquidations, worth 9.5 billion after failing to hold support. Other major assets dove, made Bitcoin look like it was just taking a tiny little dip. It was crazy. Let's see if we can get back to it on here. Yeah, so Bitcoin. Wow, the lag. So much data. This is one of the reasons I like this weird chart, by the way, chat. Everyone wonders why I do this crazy fucking chart. Because it gives you perspective on things. So our candle bars up here, Bitcoin. Most it dipped. You can see on the right, that gray percentage on the right hand. That's where my mouse is. 8%. I mean, if we zoom out, obviously the dip's a bit bigger. But that flash crash dip, like just this momentary quick one, about 9% down, 8% down, depending on where you measure from. Some altcoins, 82%. So this is why I think it had the sort of metrics it did of being the largest crash ever. So like DYDX crashed almost 90%. Dimension almost 90%. TON, that's surprising. TON dipped heavy, wow. Injective. What else do we got here? Neutron, that's just a Cosmos coin. So yeah, kind of crazy. This is so true. So the liquidation volume is underestimated, definitely. Many estimate it to be 40 billion or more because Binance can only Yeah, I also want to know what this means. I don't want to take up too much time on stream. But what do you mean it can only... Not, what do you mean? I know we just read it, but like, that doesn't make sense. Agree, according to recent news, it was reported that 21 billion exited Binance following the incident, so it seems users are withdrawing their funds. I hope this continues because it is a dump, not an exchange, and the way it treats its users is just awful. This is a big move towards the perpdex narrative. Atom cost 0.01 during the dump. I have very mixed feelings on centralized entities like Binance, and see, like, there's no surprise that Aster, backed by Binance and CZ, came up as Hyperliquid was really growing. And half of Aster is centralized and kind of off-chain. It's weird. So, like, yes, I think the rise of DEXs is beginning. The problem is, I can't envision a Web3 world that's fully decentralized. There will always need to be players like Coinbase, Kraken, Binance, etc. And, like, so the real thing we need to be thinking about, hoping for, fighting for, is those platforms improving, being more friendly with their customers, maybe more competition, getting replaced by better ones, you know, whatever it might be. Like, in my mind, of the exchanges I've used, Kraken stands out as the most polished. Not even in all of its offerings. Coinbase obviously has a lot more stuff to offer than Kraken in general. But Kraken is very professional. They do things right. I've never heard them, like, something like this recent story with Binance that we're about to get into, where shit depegged like crazy. Kraken's like the only one, and it still has its issues, don't get me wrong. Okay, so now so this is more or less what happened. Let's get into some of the theories. I just have a list of ones. I don't know if we'll look through all of these. It'll depend if I think they're shit or not. But let's pull up a couple. We're going to start with threads here on Twitter, actually, as opposed to pulling up news articles. Okay. An on-chain forensic study suggests the October 10th through 11th crypto crash may have been a coordinated Oracle attack, not just market panic. The 60 mil trigger seemed amplified by systemic vulnerabilities. What the fuck? This is not the one I wanted. No, where's... Oh no, I got my links all mixed up. Okay. How does this always happen? How do I always lose my links when I need them most? Oh, I didn't see that. Oh, 2023? Why are you showing me that? You know what? Okay, this is kind of interesting. Oh, wait, no, this is 20 minutes ago. Oh, boy. Interesting. Wait. What is Trump? I don't know. Trump. What is he doing later today? Is he addressing... This is crazy, too. Our government being shut down for 16 days. It's longer than all other government shutdowns combined. It's crazy. Lost over 20 million, received 2 Juan token voucher. That's just insulting. Give them 0 at that point. Yeah. Yeah. No, that I would rather just not get anything and be like, all right, they ignore. Like, that's crazy. Oh, why can I never find? Alright, I'm gonna try a couple here. Okay. Found one. Kind of a smaller count, but I thought it was a really good breakdown. That's why it was hard to find, too. You know what? Do I throw him a follow? I'll look at his other content. Okay, Crash wasn't random. It was a coordinated, insider-driven reset designed to flush leverage and reset the crypto system for the next leg of the bull market. This part happens a bunch. Crazy movements often come before longer movements in the other direction. A blow-off top, right, is basically this. When there's a blow-off top at the end of a bull run, it's like a flush out all the shorters before we kind of revert to going actually down in a bear leg. You know, this is the opposite. So October 9th, China's Ministry of Commerce announced new export controls on rare earth metals. The news initially seemed minor. Right-wing financial media framed it as China weaponizing the rare earth supply chain. Trump's response was 26 hours later when he posted on Truth Social announcing 100% tariffs on all Chinese goods. See, that's what I was saying. It wasn't just on software service. Dow dropped 600 points, oil and yields fell, and Bitcoin collapsed from 121 to 102K. Here's the twist. Bitcoin started falling more than an hour before Trump's posts. Whales were already shorting. New accounts on Hyperliquid opened massive short positions, perfectly netting them 192 million profit. So we're going to pause right there for just a second. Is this the one? Hold on. Here it is. So this is a weird little article that kind of summarizes a bunch of different things. We care about the first two though. So on October 10th, trading volume spiked on Hyperliquid. A single wallet opened positions worth more than 1.1 billion across Bitcoin and Ethereum in shorts. Whale exited with profit of close to 200 million. Just look at this real quick. Wow, that's the shittiest quality image ever. An hour or so before this all happened an hour or so before public remarks from President Donald Trump about 100% tariffs on Chinese technology experts. On-chain and derivative trackers flagged large Bitcoin and Ethereum shorts opened on HL. The announcement hit, a sharp cascade followed, derivative venues saw billions in liquidations, BTC fell double digits, blah blah blah. Why it looked suspicious. And these aren't like coincidental things. Or if like only one of these things happened, it might be fine. It's not just a coincidence when all these different things line up. So the opening of these positions arrived just minutes, or some were only minutes, some were like an hour prior, before the major announcement. The size was extreme. These weren't like large whale accounts that we're used to seeing use millions of dollars. These were like new accounts, freshly funded, with massive size. Estimates placing notional exposure caused BTC were over 1 billion, or above 1 billion, just for these new accounts that were shorting out of nowhere. The trader, oh, is this just talking about one? Okay, this is just talking about one single trader. Although I assume there's multiple people behind the account, which is kind of why my brain goes there. The trader scaled or doubled into shorts right before the remarks. The timing matched liquidation engines going to overdrive as soon as the announcement spread. Actually, that's not really. That's just how it works. The precision sparked speculation of insider information. There's no direct evidence. It could have been data-driven macro bet or something else. But here's yet like another interesting thing. I haven't seen this reported too much elsewhere. Hours after the first crash, the same address re-entered the market with 340 million in a Bitcoin short. The position opened near 117, signaling a view that further downside remained. And he was right. We went to like 102, right? Same fingerprint as the first trades, re-engaged with size within hours, and tactical timing during a bounce, not a breakdown, which success, this part, suggests strong conviction or foreknowledge of continued headlining pressure. So, unless they're just the luckiest traders on earth, there seems to be some accounts on chain that knew exactly what was going to be announced and when. Which is what I was just gonna say, which suggests that insider knowledge from Trump's inner circle knew he was going to post this. So, like, I could never guess who, right? But almost certainly someone in the Trump world, maybe it's one of his family members, one of his advisors, you know, who the fuck knows? It could be Rudy Giuliani. Basically just knew this was happening and decided to make a shitload of money off of it on chain, is what it seems like. Okay. So, what actually caused it mechanically? This is where we're going to hopefully get to Binance, if this thread goes there. So, altcoins, which are used as collateral on some perp exchanges, not all, right? So, like on Hyperliquid, I can deposit USDC from Arbitrum, and that kind of works like you'd expect. But I could also deposit ETH or Bitcoin, and that means my underlying collateral amount is going to change as that asset's price changes, right? And there are some, I don't know how Binance works these days, but I think you can use like alt coins as collateral, right? Like not just blue chip top 50. I think they accept some pretty random coins as collateral. Timmy, you check Forframe from time to time. Have you seen this? It was one of the most talked about topics. Yep. Yep. I have seen that. I don't put much faith in it. Seems pretty random. Let's see though. Let's see. October 6th. What were we looking like? We were near top. Yeah, we were at our top. I don't know. I remember seeing that original post, actually. Like, not just the screenshot, yeah. There's a bunch of discussion beneath it. I don't know why I just opened this. If there's anything interesting. Your portfolio just turned green? It would be a shame if somebody tweeted. Okay, I don't know why I opened this. Okay, so altcoins were being used as collateral on many perp and just general leverage. You could also use altcoins for leverage with lending protocols, right? If I want to put a bunch of some coin in Aave, take out a loan against it, that's technically a form of leverage. So because of this, everything dumped simultaneously. Because when Bitcoin and Ethereum started dumping, any accounts that were using altcoins as collateral had those altcoins auto-sold to cover the liquidation. Also, there were Oracle glitches, exchange freezes, and CoinGlass and... Oh, I didn't know about this part. CoinGlass and CMC went offline. Interesting. I guess just too much data, maybe. So the crash started right as the U.S. market closed. Do you think it's a coincidence that Trump tweeted when he did, right? Just as things were getting to its most volatile state. Here we go. Okay, so here's the juicy part. Now in Binance is where the real fishy stuff was happening. So 3 pairs, USDE, WBET, and BN Sol, all scheduled for pricing updates. I saw something about this. They made a tweet about they were going to update the underlying like code of how these things were priced in their system for the purpose of collateral liquidation and such. I'll try and find that if they don't have more about it in here, because that also seems like such an interesting coincidence. Or, not necessarily a coincidence, it could also be that whoever did this attack saw the news that those assets were going to get a pricing update and somehow figured out a way to use that in their advantage. Doesn't mean necessarily Binance was like behind this. Binance reimbursed 283 million in losses. Damn. Wait, Yep, it would be good if we can see the chart. Oh, the chart in the 4chan image here. You can see enough of it. Oh wow, here's a good little metric. So there was 9x more liquidations than when FTX collapsed. Yet, no exchanges failed, no protocol defaulted, system absorbed it more or less. Funding rates were reset to 2022 bear market lows, the cleanest setup in years. Market rebounded 550 billion in 40 hours. Bitcoin going back above 115k. I don't know if I'd call these things reset events, just because like nobody planned for COVID to happen when it did. Same with FTX. I'm sure they would have liked to keep going as long as possible. Luna did kind of get attacked, so like it is possible that that was set up as a reset event, but okay. Okay, so let's look a little deeper now. Is this gonna have the... Yes, beautiful. Okay. Not a random clash. Evidence strongly suggests a deliberate, carefully planned Oracle attack. The cost of the attack was minimal, an estimated 60 mil market dump. However, the destruction was amplified 300x. The immediate red flag in the October event was its hyper-specific nature. What does this link to? Is it going to be the thread I was looking for? It is! Oh, beautiful. Okay, let's read this one first. This is the one that I first saw. Okay, I'm gonna skip past all the stuff we've already read, obviously. Okay, so the three assets that we'll be really looking at where something weird happened that triggered this snowball effect was all on Binance. USDE fell from its peg of $1 to 65 cents. On pretty much every other exchange, even with the chaos, it only depegged by about 10 cents. Still bad. Don't know if we should trust that as a stable coin, because it kind of isn't. It's weird. Athena's odd. Wrapped Binance ETH, is that WB? Yeah, wrapped Binance ETH crashed to $430. Holy shit, 88.7% below ETH value just on Binance. And then Binance Sol, I assume, BN Sol plummeted to $34.09, while other exchanges saw minimal movement. Immediate red flags. Market panic does not... This is a great line. Market panic doesn't discriminate by exchange. When organic moves happen, up, down, whatever, they happen everywhere pretty evenly. That's the nature of a free market. It's one of the benefits, one of the things that just emerge from a massive free market with millions of participants. Whenever you're trying to wrap your head around this thing, just think of arbitrage. Best possible example, right? If there's crazy panic going on that's not exchange specific, all exchanges are going to stay somewhat in line because there are thousands of people looking to profit from that chaos by arbitraging and doing other things to keep those prices in line. Here's where things get interesting though. On October 6th, Binance had announced updates to the pricing mechanism for these three assets, scheduled for October 14th. The crash occurred on October 10th through 11th, precisely within this vulnerability window. Okay. Okay, so let's see. So BN Sol, its index price for tracking interest on open positions of any kind, for liquidations, that sort of thing. During the crash, the right side is what it was going to change to. Before the adjustment, 30% of its price weighting came from the Binance Sol USDT pair, and 70% of its weighting came from Binance Sol pair times the Binance Sol USDT pair. Kind of complicated, but basically just using a couple different sources to pull their official price of Sol for liquidation purposes. And then they were going to adjust it so that it was 100% weighted on just this one, BN Sol times Sol USD. So Same thing here. Same thing here. So here they're looking at a very particular pairing on their exchange, right? They're looking at the wrapped Binance ETH USDT pairing or the Binance Sol USDT pairing. Here in these ones, they're doing something a little bit more complicated. They're taking the Binance Sol pairing, so more or less a stable coin, right? And multiply, so it should be about 1, right? Imagine this first part of the equation is always about 1 times the Sol USDT price for their pairing of Sol USDT on Binance. Then one of the updates they were going to do is that this first part of the equation, Binance Sol, will not actually pull its price from the trading pair, but rather the official redemption ratio. So that's a good change. That's a good change, this last part at least. I don't know about making this 0. But what that basically means is... skip whatever song that was. In fact, hold on. I gotta switch up the playlist a little here. Cool. The second part of this basically means that instead of looking... In fact, let's pull one of these up. BN Sol... Sol. Okay, so this is what we are talking about here. They have a BN Sol pairing, which should be stable all the time, right? You see the problem? See the problem? So previously, during the liquidation crash, it was looking at this to determine how much BN Sol is worth. So imagine you're using BN Sol as collateral on a long. You have a $100,000 long open on something. Your BN Sol is the collateral behind it. According to this chart and this pricing, holy smokes, that's low. BN Sol become basically worthless. For a moment there, it was worth 0.13 what a normal Sol would be. Like, almost a tenth. And so what they were going to do here is change it so that the first part of this equation, the BN Sol, does not actually come from here, but comes from its redemption rate, which I don't know if they mean theirs or if there's an official one, but so it's not a live trading pair. It's literally like if I want to take my BN Sol, redeem it with its issuer, Binance, for normal Sol, it's not affected by something like this. It'll always give you the real price. So it kind of looks like they were making changes that would make it a bit less manipulatable, I should say, right? Because look at this equation right here. BN Sol, that dropped to 0.13 multiplied by the normal Sol price, which has super thick liquidity. That's why they're not changing that, I think, right? Normal Sol USDT, super thick liquidity, does pretty well. But so it was basically the price of Sol times 0.13. So if you were using BN Sol as margin on a loan, for a split second there, you had a tenth of the leverage you should have, or a tenth of the margin you should have, and that's when everything gets liquidated and goes boom. Before I move on, does that make sense? Real quick, because that's the core of like what happened here. It's the most important part. Okay, cool. Well, we're gonna keep moving on because there's a little bit more even. You're not gonna understand the rest unless we're aligned. So, is it a coincidence that out of thousands of trading pairs, only the ones with announced updates experience such extreme depegs? The probability does seem astronomically small. Okay, so I was hoping I could refine this. It's beautiful. 5 a.m. Markets began declining after tariff news. Normal-ish behavior at 5:20 a.m. Oh no, normal-ish behavior. This should be a page break, I think. At 5:20 a.m., altcoin liquidations started to accelerate dramatically, possibly targeting market maker positions. Uh, 23 minutes later, at 5:43, USDE, WBETH, and BN Sol simultaneously collapsed on Binance. So this chart we were just looking at, that I think I closed, the Binance chart we were just looking at, looks the same for all three of these pairings. We were just looking at the BN Sol one. And then by 6:30, complete market structure breakdown had been basically guaranteed. We were just in a spiral. Bitcoin declined at the beginning, altcoin liquidations, volume spike, fairly normal market maker activity by this point. Then the depeg happened. So in fact, I don't know why I pulled up the BN Sol one. It's probably more important to look at USD. Forget which exact. Let's see if it was this one. Yep. Oh my god. Oh my god. Okay. So yeah, 65 cents on what should be a stable coin, right? USD dropped. I don't know if that math's right. Oh no, yeah. Dropped a lot for a stable coin. These also began just plummeting, with their lowest being 3K, 2K. No, I don't know what these numbers are. Oh, here, this is what they were at that time. By 550, they were tiny. Look at the decline. So they were at 5:43 a.m., 3.8K, $400. Not but 7 minutes later. 7 minutes. And then this number is pretty interesting too. So this is not looking at how much it fell. It's looking at how much is that different from every other exchange and every other price for that asset. So when WBETH was $430 on Binance, that was 88.7% lower than its price pretty much anywhere else. So real quickly, I just want to go over something that you probably all know about, but this is being recorded and going on YouTube, so I want to cover everything. I want to cover what indexes are. Is this page not going to let me show it? Oh, they changed this a lot. Okay, whatever. It's still an easy example. So when there's leverage trading of any kind, especially with perps, you don't just look, like if I'm trading this on perps with leverage or anything really. Let's go to like this. Let's pretend this was perps and I was trading this. If it says like I get liquidated, let's see, this is worth 25 cents right now. Let's say I have a position that gets liquidated at 22 cents, wherever that is, somewhere in here. That does not mean when this gets to 22 cents. It means when the mark price gets to 22 cents, sometimes called the index price, or usually indexes are used for the mark price. So what that is it looks at a bunch of different prices for the asset in different areas and aggregates them into an average. The reason they do this is to prevent easy flash crashes, right? If the only thing that was looked at for liquidating this asset was this chart right here, one single whale that sees just an opening in the order book or whatever it is could do a huge dump, liquidate everyone, create a cascade. So it adds a lot of redundancy, right? Where BitMEX is the first place I learned about it. It's why I thought to go here. So when you're trading Bitcoin futures on BitMEX, it's tracking its own thing called the XBT index. Currently, that index is made up of 50% Bitstamp prices, 50% OKCoin, which is wild, by the way. I don't know why they're using that. It used to be like 7 different sources: Binance, Coinbase, Kraken, etc. Oh, here's a cool breakdown. Okay, so BitMEX, you can trade a bunch of different things on perps. Let's say you're trading Doge, right? Actually, no, I need to see the top here. ADA. Let's say you're trading Cardano. The index price BitMEX is going to track to see how much leverage you have, how in the hole you are, liquidation, close to liquidation, is not the ADA price, but something they made called BADA. BADA is a weighted average of 41.9% Binance's price for Cardano, 8.8% of it is coming from Bybit's price for Cardano, 12 from Coinbase, 15 HTX, etc. In fact, this makes much more sense. Yeah, so like BBNB, you know, split between all these different exchanges up here. That's what indexes are, purpose of how they work, which is pretty important here. And I'm sure most of you already knew that, but again, just recording for YouTube, so covering everything. So by 6:30, market structure had a complete breakdown. There were over 10 billion in liquidations in just like the past hour. Market makers had pretty much tapped out. So one of the things that keeps prices somewhat steady, the reason why when you go look at like any exchange, why there's always orders in the book here, not just always orders, but they're tight, right? The difference between this and this is maybe 0.001% price wise. Those are market makers doing that, right? And when things get super crazy, they can sometimes just step away and say like, well, this is not how we trade. We're better in stable markets. This is scary. And as soon as market makers step away, that's when stuff can get even more volatile, because suddenly the order books don't have consistent orders to absorb buys and sells. And then yeah, Binance continued its super weird specific price anomalies. Look at some of these. ETH down to, yep, 439. The 23-minute gap between general liquidations and the specific asset crash suggests sequential execution rather than random panic. I don't know about that, maybe. So the USDE factor. Several elements made USD particularly vulnerable if someone were looking to exploit it. Hidden leverage. Binance's 12% yield program had encouraged recursive borrowing, creating positions leverage up to 10x. So outside of their perps, they, if I remember this right, they did something where it's like deposit USDE for a loan, you get 12%, and then you can also borrow against it if you want. So people would deposit for the 12%, borrow more assets to get more USDE, deposit again, repeat, repeat, repeat. You just borrow like USDC, buy USDE with it, add that, and so you're kind of doing leverage on an Aave-like lending and borrowing platform. Which, again, even though it's not perps, liquidations still happen the same way, right? They'll still force sell your collateral if your loans are out of whack now. And so if your collateral is USDE, and you've borrowed a bunch of USDC or USDT, then when USDE crashes, you get liquidated, because it is now worth less than the loans you've taken out. Many traders reportedly use USD as margin collateral on perps exchange, or actually just in general. And then finally, thin order books. Yeah, this part's just like a broader issue with how many different stablecoins we have right now. Despite being a stablecoin, USDE liquidity was surprisingly shallow, and it often is. For the market cap of Athena and USDE, it doesn't have the greatest liquidity. Not just in Binance, in general. So when USDE crashed, it didn't just cause direct losses, it potentially triggered a cascade across the entire system. It is possible that the Bitcoin and ETH crashes were kind of a result of this. I mean, I'm sure someone made some fat profit on everything, but it would just take one key token, let's say. Let me rephrase this all in one quick little sentence. USDE had the perfect mix between being really big in terms of being used for collateral, like billions of dollars, while also actually not being that big on the trading side of things. So you have billions of USDE being used for collateral everywhere. You only got a few $1 million worth of liquidity in its order books for trading. You can't say that about other things. Bitcoin, Ethereum, USDE, USDC, USDT. They have thick order books, lots of trading, in addition to being used as collateral everywhere. USDE was in this unique attackable position. One theory circulating among traders is that the initial liquidation at 520 specifically targeted market makers. Oh, that's interesting. Because if you could get them to pull out early, then you can do a lot more damage. If true, this would explain the subsequent liquidity vacuum. When market makers are forced out, they withdraw all orders from order books simultaneously, leaving markets defenseless. The evidence: altcoin prices on Bitcoin fell significantly below other exchanges, a pattern consistent with everything else we're seeing. If it was coordinated, somebody made crazy profits. From the shorts, they potentially made 300 to 400 million. Again, that's just based on what we're tracking and know about. I'm positive a lot more money than that was made in more secretive ways. They also could have bought an insane amount of assets at extremely discounted prices, right? Just looking at this again, let's say you are able to snag, it's not the best idea example. Let's say you can snag some like DYM down here. Within like 5 minutes, you've made 80%, like when it goes back up. And then finally, if you kind of knew this was all coming and you were set up for it, right? Market makers do arbitrage. But if they didn't know this was coming, they might just take their hands off. But if you knew this was coming and you had arbitrage set up, that's just a whole... This is probably a low estimate, honestly. With how much stuff diverged, arbitrage was very profitable. So 800 million to 1.2 billion was the possible profit from whoever did this. And again, I doubt it's one person. I don't know why people keep using that language. That's why I'm saying they. Just because we can only find like one account on chain doesn't mean it's one person. I do like that they included this a lot. To be fair, several factors could explain the events without coordination. Cascade effects: once liquidations begin, they can sometimes just spiral naturally. There's a concentration risk these days, big time. Too many traders using similar strategies, such as looping their USDE, using it as collateral, etc. Infrastructure strain, systems failing under unprecedented volume. This one, no. Exchanges actually more or less stayed online. They didn't freeze and go offline like normal. Nothing on the tech side broke too much here. So that one I don't put any faith in. Still looks like a well thought out plan. Otherwise, why make such announcement of changes that allow... Yep, actually, according to the released data, most of the liquidations happened on Hyper, but the issue is that the liquidations, its users not being able to trade, or it's not executing, etc. on Binance. Okay, then that's probably what they're talking about here. I hadn't heard as much about that. I know I tried to... Or I thought about depositing to Hyperliquid during that, just like a little bit. I didn't even have enough gas to do it on Arbitrum. I hadn't topped up on gas in a while, and the network was so congested, it was like $28 in ETH just to deposit on Arbitrum. I was just too lazy to go swap something else to ETH. I wasn't going to pay $28 to get more gas. It's kind of nuts. Yeah, look how high Hyperliquid is above the next highest. Bybit's bigger than Binance for perps. Interesting. Or not bigger. This is just... They had more chaos during October 10th, we should say. So I guess kind of in summary, what makes this suspicious. The price crash was limited almost entirely to just Binance. Only these 3 pre-announced vulnerable assets were affected. And then these all these different things occurred within this exact tiny time frame when things were vulnerable. Market makers were kind of taken out in a sense long before the big liquidations started happening, so that just made it even bigger with market makers no longer involved. And then in general, we've just seen this happen a lot before, where a mysterious gigantic position will be made out of nowhere right before some big news happens. If this was indeed a coordinated attack, it represents a new evolution in crypto market manipulation. Instead of hacking systems or stealing keys, attackers would have weaponized market structure itself. This would mean every exchange announcement becomes a potential vulnerability. Transparency could paradoxically decrease security. Market structure needs fundamental redesign. Current risk models are inadequate. I don't know why you didn't put another 5th bullet point, which means the President of the United States is engaged in coordinated attacks and market manipulation. Oh, actually, there's really no evidence to suggest that. To be fair, I'm sure a lot of people in Trump's sort of circle knew he was going to be announcing that later. It could have been one of them on their own. It's just weird how quickly he rolled it back. You know, it's like he really wanted to make that announcement just to cause that market movement, and then be like, "Oh no, never mind, we're good." So yeah. Also, one thing that wasn't in here was just that to some extent. Oh damn. Oh, it's got a fucking series on this. To some extent, the entire market was very over leveraged. It was almost asking for a flash crash, right? Open interest, total aggregate, all time high. Insane how many people were long. Some shorts mixed in, but just in general leveraged with a bias towards long. So obviously we're not going to get any smoking gun anytime soon. In terms of this is one of the problems with Web3 is we're lucky enough for it to be transparent where we can look at this, we can look at the accounts on Hyperliquid, we can look at charts in the past. We're also unlucky in that it's opaque enough where like it would be very hard to ever specifically pin who was that Hyperliquid account, or did somebody know Trump was making that announcement ahead of time? Were market makers in on it? Did Binance purposefully shut down some of its systems so people couldn't trade? It's really hard to ever get 100% on that. So the best you can do with events like this that happen is just think of it personally. How did it personally affect you? How could it have personally affected you if you played it different? And then think about like the climate that it happened in. So again, it's nothing too specific. Things like this are so outside of the scope of regular traders like you and I that it's more interesting to research than anything. There's no strategy to be pulled from this. The closest is maybe if you're a little code savvy, you might want to write something that basically watches Hyperliquid, and if any new accounts pop up out of nowhere with like higher than 7-digit positions, maybe it notifies you, that kind of thing. But my takeaway, as someone who's been in crypto for a really long time, maybe help you guys out because I got to shut down the stream in a moment here, is for the most part, if you kind of look up, some chop, that's kind of a pullback, but it's within the range of chop. Nice organic pullback. We had been up for a long time. Open interest was looking super good. And in fact, if we even want to throw in like a long-term trend line here, roughly, right? Just God, this chart's so small. Let's say something like that. Not a super clean trend line, but not my point. Point I'm trying to illustrate is like if this is our general bull trend, we have not had a serious crash or pullback in a while, since April, since the end of April, right? So like this crash could have gone down and touched our trend line, and that wouldn't have surprised me too much. Um, so yeah, I guess like thinking that it is never up only, it's never down only. There are always these insane moves specifically to shake out retail. Um, they usually happen outside of US trading hours. So here's a specific thing you can pull away is if you're using leverage, perps, whatever, close those positions for the weekend. I've seen a couple people talk about that, and they're so right. It's such an easy tip. It's like 95% of the time, crazy shit happens on the weekends with charts. Sure, that means you could get some crazy profit, but more often than not, it's going to be some bullshit that'll liquidate you. So Always start to get bullish when markets have been in up-only mode for a while, and please zoom out to see if it's in up-only mode, right? Because, what are we on the day now? People acted bullish throughout this whole time period, right? Like, that's not actually bullish. If you zoom out, you see we're in up-only, and being here, you could almost say, like, oh yeah, pullback looks pretty needed. Like, what, are we just going to make our trend line steeper and start exponentially ripping again? Which we will do at some point, but... 3, don't do any weird strategies like looping. Like if there's some, these never end well. Whenever you can kind of synthetically create leverage for yourself, it'll take you out eventually. What's a fourth lesson from this? Let's see. Keep stop losses. You never know what's gonna happen. And then lastly, I guess, try and get away from centralized exchanges as much as possible. Like, let's just see. That's not going to tell me what I want. Hyperliquid does it better. I forget off the top of my head, but they're like, the price they look at to liquidate you or not is like a good split between like 4 or 5 different reputable trading pairs and such. So if you are going to trade on stuff, make sure you kind of know which crook, thief. He's a rapist, he's racist, he's sexist, you know, he's all these things. But we live in a world where like it is not conspiratorial or weird to talk about these things at all. Like the idea that Donald Trump made that post because he wanted a liquidation crash for him or his family to get rich. There's no evidence for that. Be clear, no evidence. But it's not outside of the realm of possibility. These are sort of the factors you are fighting against if you're trying to win in this industry. So I know that can seem a little depressing, but almost don't let it depress you. Like if you are diehard crypto, you're gonna be here for a while. So if you got liquidated on October 10th, the way I partially did, I got a partial liquidation. Feel bad for yourself in constructive ways, like say, oh, I should have set a prop lot, I should have stopped loss, I should have closed over the weekend, things like this. But don't feel bad in a sense of like, oh, I suck at trading. Just think about it like I am literally competing against people with billions of dollars that run governments, that can move markets with a single tweet. I'm just doing my best out here, right? Like, it's a crazy time to be trading. It's kind of unfortunate. Like, if Donald Trump had been elected president 20 years ago, and everything else was the same, but there was no crypto, it would be pretty different. It's a really unfortunate thing that he got elected and is popular in this era of crypto going mainstream. Because even though I'm sure he doesn't understand blockchain or crypto to any extent, it's the perfect, like, imagine you're a criminal who somehow just became president of the United States, right? A criminal and an awful businessman who loves money. Suddenly there's this thing called crypto on the side that's not really regulated, not really tracked, you don't have to put your name or face on it. You know, every politician, I'm not just a Trump hater, trust me, every politician probably does some level of insider trading, for sure. But at least they know in some respects, you know, doing it on the NASDAQ, doing it with the S&P 5, you can get caught. There's a lot of rules and regulations against it. Trump launched a fucking Trump coin. Do you know why he did that? Because it's illegal for a president to do anything else like that in, like, the real world. Right? You can't fucking compete with the US dollar. You can't... We live in a very weird time where crypto is insane. I suggest my biggest single ending piece of evidence, and I gotta wrap down the stream. I recommend you accumulate spot over time. And then when you are hungry for it, if you want it, take a little bit of that money and use it for meme coin flipping with the Shogun bot, or for perp trading on whatever exchange you choose. So that if you lose that, it's like, ah, shit, that was kind of my play money. That was my equivalent of spending $100 to go do something fun for the day at an amusement park. I spent $100 on trading. Maybe I lost it. Maybe you turn it into a big winning. But losses in trading hurt way less if you know you have a big spot bag that you're slowly building up. Maybe they're yield farming a bit, staking, etc. I read that over 2,000 traders. I don't know how. Jeez. I'm sure there was at least one. I don't know about 2,000. I don't know how you'd even like track that kind of thing. Yeah. Yep. Same in America, Sukumu. Sukumu, normal Americans aren't allowed to do leverage anywhere. Kraken used to have it, not perps, leverage. There is like a different, it was like spot leverage trading. And then eventually as things got regulated a bit more, they had to take it away from average users. Yeah, you shouldn't worry about losing. But you shouldn't worry about losing because you have a much bigger winning bag that you're building up slowly and safely, right? And if every now and then you can turn that $100 you put into the trenches or whatever into a couple $1,000s, put that back into your big fat meme bag, you know? Or not meme bag, your long-term spot bag. All right, I do have to run. I'm already gonna be a little late for a meeting, but I messaged them, so not a big deal. All right, everybody. Probably will do a movie stream tomorrow. I'm not sure though. We might slow down on that a little bit. Let me know if you have any particular recommendations or things we want to watch. I'll probably get it ahead of time. This Market Mania was a little different. There was one specific news story I wanted to really dive into today. Please do give me feedback. I feel like I didn't dive in as deep as I wanted. Maybe I rambled and talked a little bit too much instead of just like churning through stuff. But I wanted to make sure everyone was following along. Hopefully it wasn't too boring or anything like that. You can always watch the chart at the bottom for a little dopamine. Alright, everybody. Have a good day. Bio. We will talk to you later. See you in the Discord. Wait, why are you leaving early? I said I only have an hour today. Yeah. Yeah. Alright, everybody. Follow on YouTube, please. I am going to eventually stop doing these in Discord entirely. Or not entirely, but some days will not be in Discord, just YouTube. So, see you around. Bio, friends.